Ladies and gentlemen, good day and welcome to the Q4 and FY25 conference call of Steel Authority of India, hosted by Nuvama Wealth Management Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this call is being recorded. I now hand the conference over to Mr. Ashish Kejriwal from Nuvama Wealth Management Limited. Thank you, and over to you.
Thank you, Yashasvi. Good afternoon, everyone. On behalf of Nuvama Wealth Management, we welcome you all for Q4 FY25 post-result call of Steel. We are delighted to have Dr. Ashok Panda, Director of Finance, along with his team, who can help us in understanding the Q4 results and his view going forward. I would request Mr. Panda for his opening remarks, and then we can open the floor for Q&A. Over to you, sir.
Thank you very much, Mr. Ashish Kejriwal ji, and I welcome all the participants to this con call. Good afternoon, everyone. I welcome you all, investors and analysts, who are joining this result con call for this financial year, sales for Q4 and financial year 24-25. Before I present the highlighted results, I would like to briefly apprise the House about the global as well as domestic economic scenario in which we have been operating of late, as this impacts the results significantly, and also will tell about the improvements that we brought in our company at this stage. After the presentation on the economic scenario and the results, we shall take up your queries in the Q&A session. So, world economic scenario about this, the rising uncertainties and volatilities due to the tariff war, geopolitical scenarios, etc., have led to the global GDP projections being lowered by all major agencies. IMF, in its World Economic Outlook, published during April 2025, has mentioned that owing to the high degree of financial integration across the globe, the tariff war is bound to lead to an economic slowdown. The uncertainty around the trade policy and monetary policy is another factor that could lead to economies taking a southward trend. The IMF has reduced its projections for global GDP growth rate in the current year 2025 to 2.8% and 3% in 2026. This growth rate is, however, uneven across the regions, influenced by various other factors like trade policies, inflation rates, and geopolitical situations. Projections for emerging and developing economies stand at 3.7% and 3.9% for 2025 and 2026 respectively. On the other hand, the advanced economies stand at much lower GDP growth rate of 1.4% and 1.5% for 2025 and 2026 respectively. That is the overall scenario of world economic situation. Coming to global steel industry, the global steel industry is navigating a complex landscape influenced by economic trends, trade policies, technological advancements. Global economic scenario in 2025 presents both challenges as well as opportunities for the steel industry. While certain regions may benefit from protective trade measures, the overall impact is complex, with potential for increased costs, market volatility, and shifts in global trade dynamics. Global steel production has seen a decline of around 1% in 2024. In the October 2024 SRO, the World Steel Association has forecast a demand growth of 1.2% in the year 2025. However, given the changing scenario, the projections may vary. Meanwhile, the steel industry is increasingly focusing on sustainability and technological advancement. There is a growing emphasis on reducing carbon emissions through innovative production methods and the adoption of renewable energy sources, in which all the companies are focusing their energies towards this. So also Steel Authority of India Limited. The integration of artificial intelligence and automation is also the key to enhance manufacturing ability, capacities, as well as reducing cost. On the pricing front, we can see that prices of coal, which is one of the important parameters in the expenditure side, as well as steel products, have remained sublime during the year 2024-25. They have remained downwards. Coming to Indian economy scenario, the Indian economy has also been impacted on global cues with the second advanced estimates for growth, GDP growth for FY 24-25 6.5%, down from the earlier revised estimate of 9.2%. RBI has reduced its key repo rate by 25 basis points to 6% after the first rate cut of 25 basis points announced in February 25. This decision of RBI aims to stimulate economic growth amid easing inflation, which is approaching the RBI's target of 4%. RBI anticipates a growth rate of 6.5% for this financial year 25-26 and 6.7% for financial year 26-27, which is slightly higher than 6.5% estimated for the current fiscal year. Despite the projections for GDP growth rate in near future coming down in the range of 6.2 to 6.7%, India continues to maintain its position as one of the fastest growing among major economies. Which recently we have seen that India economy has become the fourth largest in the world. So we are going in that rate. Coming to Indian steel industry, India's steel industry is experiencing significant growth driven by robust domestic demand and strategic investments. Despite all challenges, including the softening of the steel prices, Indian steel industry has consistently been growing in terms of production as well as consumption. During fiscal 24-25, crude steel production has grown by more than 5% over the previous year. At the same time, finished steel production consumption has grown by more than 10% over the previous year. India has been one of the strongest drivers of demand for steel in the recent past and projected to grow at more than 8% during the next few years. Indian steel demand will continue to charge ahead, driven by continued growth in all steel using sectors and especially by continued strong growth in infrastructural investments. The top line and bottom line for Indian producers have been impacted as the prices declined consistently. However, the prices of coal also declined. So, on the whole, there was some impact on the bottom line. With the safeguard duty notification coming into picture recently, we are hopeful that the domestic prices should stabilize and give a boost going forward. However, the ensuing monsoon season needs to be negotiated safely with hopes for better results in the coming quarters. With the Platts index for hard coking coal of Australian origin, which is standing at around $190 per ton, the prices of imported coal seemingly have stabilized, providing relief on the cost front to the industry. Indian steel industry is poised for continued growth, supported by strong domestic demand and strategic investments. However, addressing challenges such as import competition and environmental sustainability will be crucial for maintaining this positive trajectory going forward. Next, coming to company's performance of Steel Authority of India Limited for Q4 and annual results for FY 2024-25. Come to the performance of the company during FY 2024-25, the same stands as follows. While the production of crude steel at 19.17 million tons stood at similar levels as compared to the previous year of 19.24 million tons, sales volume has grown by around 5% to 17.9 million tons. This has resulted in reduction in the inventory of the finished goods. And this is the best ever annual sales performance by the company. With the decline in sales prices more than the reduction in the imported coal prices, the turnover as well as profitability was impacted as compared to the previous year. However, due to sustained efforts by the management in the steel unit, we have improved our techno-economic parameters during this year, and which has resulted in around 650 crores of advantage in terms of cost, and that has also gone into the bottom line of the company. The turnover stood at 1,02,000 crores approx. EBITDA, PBT and PAT stood at 11,764 crores, 3,009 crores and 2,148 crores respectively. Coming to the performance of the company during Q4 24-25, the same stands as follows. The crude steel production during the Q4 stood at 5.09 million tons, growth of approximately 10% over the previous quarter and marginally higher than last year's Q4. The sales volume of 5.33 million tons during Q4 was the best ever quarterly performance, growing by almost 20% over previous quarter and 17% over last year Q4. And that is why this has resulted in inventory reduction as well of finished goods. With prices also getting a marginal boost towards the end, that is in Q4, the turnover grew by almost 20% over the previous quarter, stand at 29,121 crores. Profitability like EBITDA, PBT and PAT showed a substantial growth over previous quarter to stand at rupees 3,781 crores, 1,553 crores and 1,178 crores respectively. In fact, the net profit has grown by more than 16% over the last year figure of 1,011 crores. The performance during the quarter has helped reduce the borrowings on 31st March 2025, not just for the quarter but also for the year. The borrowings stood at 29,811 crores as against 30,593 crores as on 31st March 2024. With a reduction of around 700 crores during the year. The borrowings had gone up to a level of 35,659 crores as on 30th June 2024, before coming down to 33,907 crores as on 31st December 2024. Ultimately, it ended up with 29,811 crores as on 31st March 2025. Coming to sustenance and operational efficiencies, in the areas of operational efficiency, SAIL has showcased some of the best ever performance in the areas of coal, coke consumption, specific energy consumption, beer productivity, etc., which has led to a cost reduction of around 650 crores. Coke rate has reduced to 421 kg per ton of hot metal, vis-a-vis 440 kg per ton of hot metal during the previous year. The annual average beer productivity, blast furnace productivity, has gone beyond 2 tons per meter cube per day. The same stood at 2.02 as against 1.88 in the previous year. SAIL is undertaking various drives towards decarbonization in 3 phases. SAIL plant units have entered into number of MOUs with renowned suppliers, technology providers, etc. towards decarbonization drive. During FY 24-25, the specific CO2 emission reduced by over 3% over the previous year, and we are making all efforts to reduce it further. Going forward, the boost from various measures being taken by Government of India on infra spending, notification of safeguard duties has happened now, etc. This augur well for steel demand in the country, and also the recent reduction of repo, that also is a booster for the economy. We are hopeful that the margins will improve further for the company in the quarters to come, as the overall outlook is quite positive for sustained growth in domestic consumption. So with these few words, I hand it over to Mr. Kejriwal for opening the Q&A session, please.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use this while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'll take our first question from the line of Amit Lahoti from MK. Please go ahead.
Thanks for the opportunity and congratulations on a great set of numbers. My first question is on the expansion plans. If you could indicate a timeline when we are going to start spending CapEx, and on the same question, have you secured board and government approval for the expansion plan?
Yeah, Mr. Amit, we have got a expansion plan. Right now we are at around 20 million tons of capacity, and we want to go towards 35 million tons of capacity by 2030. So these are focused on various units. To start with, we started doing the tendering activities in ISP, East Coast Steel Plant, followed by other plants. It will follow in other plants as well. So that is the kind of plan we have. And for that, we are lining up our investments, etc. for that as well. And the CapEx, we are going to increase the CapEx. And in stages, we will be taking approvals. Approvals are coming from sale board, etc.
So in terms of timeline, when are we going to start the first, say, round of CapEx on this?
Yeah, the first, as I said now, the CapEx will take place in stages. And since it is already taken up in ISP, which is ISCO Steel Plant, the tendering process is started, etc. So some initial payments have been started over there. And as we go ahead, once the packages are tendered out and the activity starts, then the chunk of investments will come from the next year. I mean, some chunk will come in 25-26, from 26-27 onwards, major chunks will start coming in terms of CapEx.
Okay. And my second question again on CapEx, if you could provide a specific guidance for FY26 for CapEx?
We have decided 7,500 crores CapEx for 25-26.
Okay. Thank you and all the best.
Thank you, Mr. Amit.
Thank you. We'll take our next question from the line of Amit Murarka from Axis Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. So, on the volume that you did in Q4, so could you help understand what was the mix of the volume in terms of finished, semi-finished?
Yeah. In Q4, the Q4 total volume was just one sec. Q4 4.72, isn't it? Total saleable steel production volume was 4.72, out of which finished volume was 4.09 million tons in Q4.
And in sales?
And in terms of sales?
Yeah, sales volume mix, I mean.
Sales volume was much more than this, just one sec, 5.33 million tons.
Yeah, and the breakup I meant, I have the volume. I wanted the breakup of finished.
Just one sec. 5.33 is total. That's total, 5.3 is total, out of which the semi-finished would be, semi-finished is around 0.48 or 0.5 you can take.
Okay. So I was just wondering that the realization for you was flat QOQ. Generally there was an improvement in steel realization across the board in the quarter. So I was just trying to understand why the realization for you was flat.
Are you talking about quarter 4 or you're talking about for the entire year?
Quarter 4 right now, quarter 4. So if you could give NSR for quarter 4.
Just one sec. So, so far as long products are concerned, you're talking about flat products or long products or in totality?
Yeah, if you could give both of them.
Like for example, in case of long products, actually between quarter 3 quarter 4, there's not much of change because in quarter 3, the NSR, which is net sales price, is around 52,500, which almost remains the same in quarter 4. While in case of flat products, there's been improvement. In quarter 3, the numbers were 46,800, and which has improved to 47,300 in quarter 4 for flat products. So on the whole, on the average also there is improvement around 300 to 400 rupees per ton between quarter and quarter.
Understood. And what would be the coking coal cost in the quarter?
Coking coal cost in the quarter, if I talk about imported coal cost, so between quarter 3 and quarter 4, there is a reduction of around 1,500 rupees because in quarter 3 it was average around 20,000 rupees per ton, which came down to 18,500 in quarter 4.
Sure. And guidances for the same, NSR and cost? And it's just a follow-up. So NSR and cost, if you could give guidance.
Yeah, NSR, as I said, actually there was a bit of improvement in NSR after post this safeguard duty and other things, and because the demand is going to grow, there will be boost in the demand. So we believe there will be improvement in the NSR, maybe after monsoon or something like that. And regarding imported coal, even regarding imported coal price, right now it is almost kind of a stable kind of a thing. So will it will continue at that level or maybe it will increase a little bit, if not.
That's all. Thank you so much.
Thank you very much.
Thank you. Ladies and gentlemen, in order to ensure that management is able to answer queries from all participants, kindly restrict your questions to 2 at a time. You may join back the queue for follow-up questions. We'll take our next question from the line of Sumangal Nevatia from Kotak Securities. Please go ahead.
Yeah, good afternoon, sir. Sir, just continuing on the previous question. So my first question is, if you could share April-May average, what is the NSR for flat and longs? We have fourth quarter. So if for the first 2 months, if you could share that. And also on the coking coal front, what is the cost expectation for 1Q or for the first 2 months, whatever we have seen?
Right. So, answer to your question is that taking NSR, first of all, net sales price. For the long products, the NSR in April and May are almost like 55,000 rupees per ton. And so far as flat is concerned, there is improvement in the flat products post this safeguard duty, and which is around 50,500, 600, 700 like that. That's about the NSR front. In the imported coal prices, as you asked, in the imported coal prices, the coal prices are almost hovering around 17,000 to 17,500 rupees per ton.
Okay, so from fourth quarter, we are seeing almost in flats 3,000 and in long 4,000 increase. And in coking coal, we are seeing around 1,500 rupees reduction. Is that the right calculation?
I mean, as you said, in the imported coal side, there has been a reduction of around, say, 1,000 rupees. And in the NSR front, it's not 3,000, 4,000 actually. As compared to quarter four, in the long, there is around 2,000, 1,700 rupees increase. And in the flat, it is around, say, 3,000, 2,500 to 3,000 rupees, yes.
Understood.
So it ranges between 1,500 to 3,000 rupees between long and flat.
Okay. Sir, one question on employee cost. If you could guide what is our expectation? Last 2-3 years, it's been very stagnant. So what is our expectation for 26-27?
Yeah, as we've been telling that actually our employee cost is coming down over the years because of the natural separations. So you can see on the absolute figures, the employee cost has come down in 24-25 as compared to the previous year, and we are expecting further reduction in the coming financial year, which is 25-26, by at least 400 to 500 crore. This is our expectation.
Okay, and just one accounting clarification, sir. So for the full year, there was the railway provision for previous years of around 687 crores. But then in the second quarter, we had shared some 1,600-400 crores of rail price revision provision for FY23. So just want to understand for the full year 25, this 650 is inclusive of that, or we have to add the 1,600 crores of the second quarter as well?
For the entire year, it will be 625 is the figure for quarter four. The net figure is 625 crores. 685 minus some other adjustment of 61 crores is 625 crores for quarter four. And that is a part of the total figure of 2,200 crores for the entire year.
Understood, sir. Thank you so much, sir, and all the best, sir.
Thank you.
We'll take our next question from the line of Rajesh Ravi from HDFC Securities. Please go ahead.
Hello, am I audible?
Yes, please go ahead.
Yeah, good afternoon, sir. My first question pertains to these, that incentive, the railway price revision which you mentioned as a footnote. So the contract numbers, the railway contract numbers, what do the cumulative and the YTD numbers mean? Because they don't add up. If you do the YTD numbers, when you report in Q4 or in Q3 and the 4 quarter, the provisional numbers which you report separately, they don't add up. And also, what is this cumulative number which you report? If you could explain, please.
This is regarding which figure, if you can clarify, actually, can you give the numbers?
So the railway price, the supply to railway government entities, so for in Q4, which you have mentioned 3,073 crores. And if I look at the YTD number in March, that is 9,496 crores. But if I add up the 4 quarterly numbers, they total up to, much higher number of more than 10,000 crore, almost 11,000 crore, while the reported number is 9,500 crores for full year.
I said just to clarify, can you hear me? Just to clarify.
Yeah.
This includes railways as well as other than railways like defense and others. So the figures will not exactly add up. These figures may not exactly add up to that number. This includes railways.
I'm just looking at the number which you report in as a Q4 number and as a YTD number, and similarly for even the preceding previous press releases. Those numbers, the YTD number don't match with the some of the 2-quarter numbers or 3-quarter numbers.
What we can do is we can take this question and clarify you. Okay.
Also, what do you mean cumulative number?
Cumulative for the year. Cumulative is not for the year. Cumulative is till date actually. Till date.
No, from which date? Because cumulative for March quarter is
March 25. Since all these years. Since all these years till March 25. We can take this specific question and give you the answer. For better clarity.
Okay. And secondly, you mentioned that you're looking to reduce your employee cost, but in Q4 there is a sharp jump on an employee cost number on a Q1Q basis by almost 20%. So what does this pertain to? And you mentioned that you're looking to reduce by 400 to 500 crore in FY26.
Right. So let me answer this question. Actually in Q4 there has been a jump of around 500 to 600 crores if I believe as compared to the previous. The reasons are because of 2-3 aspects. One is reduction in the discounting factor from 7.29% to 6.7 odd percentage.
Yes,
that has got an impact. And then the final pension provision, which was earlier 3%, it has been increased to 7.5% or something. So that has got an impact. And then looking at the profitability, the incremental PRP which is provided for the entire year has been provided in Q4. So basically pension, PRP and then discounting factor, these are the 3 reasons for increase in salary wages in Q4. These are accounting adjustments taken in Q4 compared to previous quarter.
So just to clarify, this 3,300 crore is only pertaining to all the adjustments is pertaining to only Q4, or it is like full year adjustments later in the March quarter?
It is the full year adjustment which has been done in the March quarter, Q4.
Okay, so the average number of around 2,900 crore is one should look at.
Yeah.
On a quarterly basis.
On a quarterly basis.
And lastly, could you share on your thoughts on volume? Yeah, I'll complete my question and move out on the guidance on the volume front for FY26. Thank you.
Yeah, in FY26 we are looking forward to having more volume as compared to the previous year. If you are looking at the crude steel numbers were 19 million tons in 24-25. We are looking at a number of around 20 or beyond.
Sure, sir.
Yeah. Good number.
Great. Thank you, sir. I'll come back. Thank you.
Thank you. We'll take our next question from the line of Vikas Singh from Phillip Capital. Please go ahead.
Good afternoon, sir, and thank you for the opportunity. So just wanted to understand that our sales at almost 14% still stays very high. So is there any chances that in the next year we could come down this, and out of the 20 million tons of total production, what is your own sales target, sir?
Out of 19 million tons of crude steel production, our saleable steel production is actually 18.5 million tons, or you can say 18.5 million tons. So out of that, the semis will be around, just one sec. Around 2.75 million tons, which is roughly 15%.
So my question was that next year when we are targeting 20 million tons of crude steel production, what would be our sales target, and can we bring down this 14-15 million tons of semis, or it would remain at that level?
So coming back to the question, actually when we are targeting 20 million tons of crude steel, the saleable steel will be around 19.2-19.3 million tons, and we are targeting sales of more than that. And within that, we are targeting semis of less than 14%. That means around 10 to 12% we are targeting, because we are taking various other steps for that. And going forward, actually, the semis will further come down because we are going to put up a new TMT bar mill at Durgapur Steel Plant. So which will come after 2.5 years. That time, the semis will be almost kind of zero. So very, very less, negligible.
Understood. Sir, my second question pertains to this 7,500 crore CapEx plan. How much is towards the RM, especially the pelletization plant, if you could clarify that? And what is the stage of our pellet plant in terms of construction?
Yeah, coming into the question, actually 7,500 crores doesn't include the pellet plant, because pellet plants are coming in the BOO basis. So the CapEx will be done by the BOO operator. So we'll be incurring only O&M cost after it is set up. So that is the answer to that question. Coming back to when they are going to come, they will be coming in stages. At Bhilai mines, it is going to start after a month. This month, May, end or June, sometime like that. And then the other ones like in Rourkela and Durgapur, they are at the tendering stage, so it will take some time. It will take around up to 3 years time. And there are other pellet plants also in the pipeline for which we will go ahead signal for tendering.
Noted, sir. Sir, Jharkhand inventory can be used in this pellet plant, or those low-grade inventory would remain idle?
Yeah. Coming to Jharkhand inventory of low grade, I can say actually we are planning a 4 million tons pellet plant at Goa itself, which will be consuming these low grade as well as fresh fines in the ratio of 50%. So that pellet plant is geared up towards this.
Noted, sir. Thank you. That's all from me.
Thank you. We'll take our next question from the line of Pallav Agarwal from Antique Stock Broking. Please go ahead.
Yeah, good afternoon, sir. So first question was on the volumes. So this quarter, you probably liquidated some inventory. But I also want to check that NMBC had mentioned that NMBC Steel is also, having a marketing arrangement with SAIL. So any of this quarter volumes include some steel from NMBC Steel?
Yeah, it includes steel from NMBC NSL, NMBC Steel Limited, to the tune of around 3.6 lakh tons.
So this 5.33 includes about 0.36 million tons of NMBC steel. Is that correct, sir?
Yes.
Okay. So that would be mostly trading sales.
That is kind of actually trading on some arrangement actually. So their stock is appearing in our books.
Okay.
We've been taking from them. So there is some arrangement for that, commercial arrangement.
Sure. And this year, did we have any sale of iron ore fines? We were planning to sell, from Odisha and Jharkhand. So have you seen any sales happening this year?
We have sold some quantities from Bolani mines only in Odisha group of mines. And going forward, we are planning more sales from Bolani and also in Chhattisgarh going forward, because after improving mining over there only, then we'll be able to sell something from Chhattisgarh as well, from Raugar mines. But presently, we are selling from Bolani, and that will continue.
And nothing from Jharkhand. I think we were waiting for some.
Nothing from Jharkhand, because we are still waiting for the permission from the state government, which is not yet available.
Sure, sir. Okay. Thank you.
Thank you very much.
Thank you. We'll take our next question from the line of Prateek Singh from DAM Capital. Please go ahead.
Hi, sir. Thanks for the opportunity. The first question is just to get a sense on the 686 or 625 crores provision or kind of a one-off from the prior periods that we're talking about. That comes into revenue also, right? Or does it lower your expenses? The reason I'm asking is if I adjust for it, your NSR kind of fell on a QOQ basis. Maybe I have to adjust for volumes also from NMBC Steel, but on a top line basis, it seems your NSR fell if I adjust for these revenue. Is that the right understanding?
Yeah. So let me try to explain this particular number actually. 625 is not 686, minus 61 it is 625. And this 625 is coming on the top line, which is the turnover, but it's not a part of the NSR. NSR is not including these various figures. And so far as prior to Q4 numbers are concerned, because Q4 numbers are 85 crores. So 625 minus 85 is 540 crores, which is which is the figure which is prior to Q4 numbers, which is there in the top line of Q4.
Okay. So NSR fell on a QOQ basis because of this? Because I have to remove this number from...
No. It is not to be reduced from the NSR numbers, because NSR numbers are rupees per ton, and that doesn't include these area numbers. So the NSR numbers that we discussed sometime back, those remain as it is, without getting impacted by these rupees crores numbers.
Okay. And my second question is just extending the discussion on employee cost. Two things, sir. One, when is the pay commission impact would come in once the central government finalizes it for us? And second, given that we are doing a lot of brownfield expansion going ahead, is it safe to assume that the bulk of the employees who are already working in those sites would be shared with the new CapEx, new capacity coming in, and hence the cost structure of the new capacity would be significantly better than what we are seeing right now? Because employee cost has been kind of an Achilles heel for us. So safe to assume that the new capacity will be more efficient from an employee cost perspective?
You are absolutely correct, actually, because we are planning right now for brownfield as well as greenfield expansion, which are going to come in next 3, 4, 5 years. And during that time, the employee cost would have come down significantly through normal separation and little bit of induction of fresh blood. So at that point of time, we will find that all these new facilities, they will be having less manning and more automation and AI related applications. So they will be very, very efficient in terms of manpower cost. Today we can see our new plant, which is ISCO steel plant, there the manpower cost is pretty less as compared to rest of the other legacy plants. So going forward, all these major facilities which will be coming in, all the units, they will have more efficient manpower cost structure in those facilities.
And on the pay revision timeline, sir?
Pay revision, as you know, actually it happens every 10 years, so next is due in 2027. So we'll look into that whenever it comes, any guidance, etc.
CY 27, right? Or FY?
I mean, that is slated for 2027, CY 27. So then only we'll come to know about it.
Understood, sir. Thanks for answering my question.
Thank you very much.
Thank you. We'll take our next question from the line of Parthiv Jhonsa from Anand Rathi. Please go ahead.
Hi, thank you for the opportunity. Just to take my point on CapEx, actually, in starting you said that, you'll be doing about 7,500 crores of CapEx, and thereafter the CapEx would increase from 27 onwards when your facilities come on stream and you do more CapEx. Just wanted to get your view on the debt. How is debt going to play out over the next 2 to 3 years?
Yeah, today the debt is around 26,800, 700, something like that, and we're planning to reduce it further in this current year. Last year also we reduced by around 750 crores, and now we are planning to reduce month on month. And going forward when the CapEx will be increasing, we'll have two-pronged approach. Number one, we'll try to increase our profitability, so from internal accruals we'll be able to compensate the part of the requirement, and the rest part will line up for other instruments available for getting this fund, etc. Debt equity ratio is good enough to take care of these two aspects going forward.
All right. And sir, in your opening remarks, you mentioned that because of some techno parameters, you were able to save close to 650 odd crores. This which directly had, calculated down to your bottom line. Just wanted to know that there are possibility to better this going forward, or we can take this number as a standard number going forward?
No, purely our target is much more than that. Actually, that is what happened last year, while our target was more. And in this year, again, we are aiming at more figures compared to that number. We are targeting
possibility to give
much more cost reduction, because that is a continuous process actually. And there has been improvement in all these physical parameters over the years. Specifically in 24-25 over 23-24, there has been a good improvement, and we are looking forward to better improvement in 25-26. The numbers should be better than this. This is our target.
Okay. Thank you so much, sir.
Thank you very much.
Thank you. We'll take our next question from the line of Aditya Vedekar from Axis Securities. Please go ahead.
Yeah, thanks for the opportunity. Sir, my question is with respect to the capacity expansion which we are targeting up to 35 million tons. So can you break it down? Means by FY 28, do we expect any incremental capacity to come on stream? And if you can further break it down in terms of plants, which capacities will come first, slightly more detailed answer on that.
I'll try to give you as much as possible, not entirely as you want. But the question is that I have told you actually 35 million tons from current 20 million tons, increase of 15 million tons includes brownfield as well as greenfield. So in the brownfield, there are deep bottlenecking efforts as well as setting up of new facilities. These are the two things which are happening. And in that process of deep bottlenecking, by 2028, we are expecting to increase it by maybe around 2 to 3 million tons, something like that, around 3 million tons, something like that by then, because deep bottlenecking projects will come quickly. And so far as brownfield and the greenfield projects are concerned, they take their own timeline of around 3 years, something like that, after they start doing the execution activities. So those will happen subsequently. Now, as you said about the plants, the first plant that we started doing this is ISP, which is ISCO steel plant for the brownfield project, as well as a bit of for the greenfield project, as well as a bit of brownfield out there. So in the brownfield, maybe around 0.5 million tons will come in ISP by that 27 or 28. But the entire 7 million ton ultimate capacity will come by 2029. So that is for ISP. And similarly, brownfield and the debottlenecking activities are going on in Durgapur steel plant as well as Bhilai steel plant as well as Rourkela steel plant. So these will also add capacities of 1 to 1.5 million tons by 2028. But so far as the greenfield projects are concerned, they are taking steps in this plant, and then all of these are geared up towards giving benefits by 2030.
Okay. And what will be the peak CapEx? You mentioned you given guidance on 26 CapEx, but you said that in 27 the CapEx will be peak. So what quantum will be that?
No, in 27 it may not be peak actually. Let me try to because this year we have given a CapEx of 7,500 crores, and slowly as the projects take up, so the payments will start, and based on the milestone payments, the CapEx is going to increase. So this peak level of this CapEx may happen sometime around maybe just one sec, could be somewhere around 28, 29 like that.
And what will be that? If you can quantify that?
That we have to see actually. I mean, anybody can guess the number with respect to capacities. But then it will increase quite a lot. If it is 7,500 today, so it may increase by around 10,000, 15,000, something like that. At that point of time, we need to quantify, because these are very dynamic kind of a thing, and depending on how the projects take off and then the kind of milestones they have, based on that the CapEx plans are done.
Okay, sir. That's it from my side. Thank you.
Thank you, sir.
Thank you. We'll take the next question from the line of Nirbhay Mahawar from N Square Capital. Please go ahead.
Let that be the last question.
Good afternoon, sir. Just a follow-up on the cost side savings. Is it more driven by the better utilization of plant?
Can you please come back once again on your question?
You have seen substantial improvement in your techno-economic parameters. Just wanted to understand, is it because of better utilization of our plants, and this is going to continue in future also?
Yeah, let me answer this question. Let me answer this question. This major steps that we've taken in 24-25 are that we have stopped some of the inefficient old blast furnaces. 3 number of blast furnaces stopped in Bhilai and Rourkela in different points of time, and then we increased production from the other bigger blast furnaces, because bigger blast furnaces, when you increase production, you can concentrate on reducing the bettering the technical parameters. That is how exactly has happened. And if you see actually beer productivity on an average for the entire year for sale has been more than 2, in spite of the fact that these 3 blast furnaces have stopped in between. So this year round, the beer productivity is going to go beyond 2. There's no doubt about it. And production ramp up is taking place from other blast furnaces which are operating, other larger blast furnaces which are operating. So there we are getting a bunch of cost reduction over there. And we are targeting, that is why we are targeting better cost reduction as compared to previous year as well.
Sir, another thing on the market side, is the spread for long products much better than flats right now? and how is the outlook for the future?
See, what's happening is between LP and FP, although last year LP was doing good, FP was subdued, and after the safeguard duty, etc., and some international dynamics, there has been a lookup in the FP prices, and it is cyclical as well. And as the economy is going to improve right now, as we are expecting, we hope that FP market is going to improve going forward, and LP also will improve because of the infrastructural sector boom. So both the things should remain good in 25-26. That is our expectation.
So are our higher share of long product overall helping us in overall operating performance vis-a-vis peers?
In case of sale, actually, we are maintaining a balance of almost 50-50 between LP and FP. So during the cyclicity of any of the side, the other side gives us the benefit.
Right. Thank you.
Thank you very much.
Thank you. Ladies and gentlemen, due to time constraints, we'll take that as the last question for today. I now hand the conference over to Mr. Ashish Kejriwal from Nuvama Wealth for closing comments. Over to you.
Yeah. Thank you everyone for attending the call, and on behalf of Nuvama, we really thank the management to give us the opportunity to hold this call. So lastly, if I can sum up what you have discussed in this call, is it safe to assume that we are expecting something like 3,000 rupees price increase in Q1 FY26 over FY20 Q4, along with 700-800 rupees decline in coking coal cost and lower employee cost also, which was somewhat higher this quarter?
Let me sum up and tell you actually, so far as imported coal price is concerned, we expect that it is almost kind of stable. So that reduction may continue, number one. Number two, so far as sales price is concerned, although it appears to be 3,000 or 2,000 rupees as compared to Q4, but it is market driven. So it will be up and down as compared to that, and most of because the monsoon is going to come, so during that time it will remain little subdued, and after that we expect better improvement in that. And the third question was about employee cost. Yeah, employee cost, as I told you certainly that because of the network separations, that is going to come down.
That's great, sir. Thank you so much, and all the best for future, sir. Any closing remarks, sir?
Yeah, let me tell you, thank you very much, Mr. Ashish. And the forecast for Indian economy by various agencies have been quite encouraging, and the support by the government is strengthening. They believe that the economy will continue to do well. Steel demand also continues to prosper, and we are hopeful that the prices will maintain, and momentum that has become visible recently may continue going forward. Apart from the improvement in operational performance, the company also remains committed towards sustainable performance, including more emphasis on decarbonization, improving capacity utilization, value addition, and achieving cost competitiveness. At the end, I thank all our investors for their reposing faith in us, and I'm hopeful that the same will continue in future as well. Thank you everybody, and thanks a lot.
Thank you, sir. On behalf of Nuvama Wealth Management Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.